What's going on, guys? Welcome back to another video. We have a lot to talk about after the crazy day in the market that we have seen today, and quite honestly, there's a lot of confusion as to why we are seeing the market behave the way that we are today. So we're going to be breaking all of that down, and as always, we're going to be covering some of your favorite names here: Neo, Palantir, Sofi, AMD, and HIMS, going over some of the most relevant and up-to-date pieces of news to keep you guys updated, and as always, going over the charts to give you guys a better idea of what to expect in the short term. So before we get into all of that information, guys, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys are and turn on notifications so you're notified every time these videos do end up getting posted live. And as always, massive shout out to all of the members of my private trading and investing community, Less Trades, More Profits. I'm gonna throw some of the gain screenshots up on the screen here. I mean, guys, after the 30 plus 10x trades that I handed out to everybody over the last 3 months here, after my calls, as soon as we saw that Trump tweet with the escalation between the trade war between the US and China there, of taking a step back, relaxing and waiting, making sure that we are preserving our capital, again, I just keep proving to you guys each and every single week that this is the way that if you want to actually have a chance at having long-term success in the market, this is the way that you need to be operating. So again, if you guys do want to jump in there with us, I am offering you guys a very special sale right now, 50% off your first month with the code November with that link down below. Prices are going to be increasing at the end of this month though. If you do hop in before the end of this month, you're going to get locked in at this lower rate. Prices will never go up on you. Hope to see you in there. I mean, again, once you go through the learning curriculum videos that I have for all of you in there explaining everything, you're probably going to say the same thing that everybody else does is: one, I didn't realize that all of this could be that simple, and two, I wish I was doing this the entire time I was operating in the market. So without further ado, guys, let's get right into it over here. The first thing that we need to talk about is this Supreme Court decision. Tariff refunds are now a real possibility and a giant mess. The market is not a big fan of the possibility of a lot of this tariff revenue being returned to other companies, countries and corporations there. So again, those net outflows that we would see, the market obviously does not like. Now, there were also some rumors circulating around today that the tariff rates between the US and China here, the rate that China is charging the US and the rate that the US is charging China, were going to be significantly decreasing. I haven't really been able to confirm that anywhere. I've seen it circulated around a few times, but if that is the case, well, that would actually be a very, very positive and bullish development. It completely wipes out, again, the Fed and a lot of these other economists' tariffs causing inflation narrative, which just didn't seem realistic, or a significant amount of inflation didn't really seem realistic at all throughout the time period this year, and we still have not seen that massive spike. And also, it could lead the way for more rate cuts. So that is something to keep in mind as well as we go through the next couple of days and weeks. The second thing over here, and this is where things start to get a little bit more important. The Trump administration live updates: flight cuts could hit biggest airports from coast to coast as a result of this government shutdown. So yes, we are seeing some of these industries, maybe the airline industry, starting to have some issues here, but the most important thing is coming from what Jerome Powell and a lot of these other Federal Reserve members are going to be continuing to reiterate over the next couple of weeks if the government does not reopen. Federal Reserve Bank of Chicago President Austin Goolsbee said a lack of inflation data during government shutdown makes him more uneasy about continuing interest rate cuts. Goolsbee noted there aren't as many private sector data sources for inflation as there are for the labor market, so policymakers don't have as clear of a view into what is going on with prices during the shutdown. So I think a lot of what people are doing, especially since the last FOMC meeting, are taking what Jerome Powell is saying and what Austin Goolsbee here are saying completely out of context. When the Federal Reserve board members come out and say, we don't know if there's going to be another rate cut, even though the market has all but kind of priced in there being another rate cut, they're going to freak out. But at the end of the day, what is the reason why they're saying that? Well, the Fed has told us many, many, many times in the past that they are going to be data dependent. If they aren't going to be receiving the data, obviously it's going to make it more difficult for them to actually make a decision. But what we also have to think about is that the Fed is now more focused on the labor market right now than they are inflation. We heard that at Jackson Hole, and it's been something that I've been saying throughout this entire year, that the Fed is going to be okay with letting inflation run a little bit above target because, again, there's not much that they can do besides leaving interest rates at much higher levels than even they were previously before we actually started these rate cuts again, which obviously would create a significant drag on the system. So when we think about this situation here, the Fed is going to be okay with letting inflation run a little bit above target, but they do not want the labor market to start slipping because that could slow down growth. They're going to be more focused on making sure we are growing in our economy versus these inflationary pressures here. So one of the things that came out recently, announced job cuts last month climbed by more than 153,000, according to a report by Challenger, released Thursday, up 175% from the same month a year earlier, and the highest October increase since 2003. And again, they are citing AI as a continuing factor to disrupt the labor market. Now, something that I think we're going to start talking about a lot more on this channel here, in all the live streams I do with you guys every single day, is that it's a possibility that there is really nothing the Federal Reserve can do right now to actually slow down these effects in the labor market, because let's just say, for example, that the vast majority of these job cuts are due to these technological advances in AI. Now, what actually happens if the Federal Reserve starts cutting rates? Well, in general, when the Federal Reserve cuts rates, it increases credit availability across the board. It encourages new investment in companies to grow. Now, what is one of the major places that a lot of people are putting their money into right now? Well, obviously AI. Now, if this new capital with lower interest rates is going to help these technological advances in AI happen even faster, well, then that means that the Federal Reserve cutting rates could easily actually lead to an increase in the unemployment rate, as these AI-related layoffs could start picking up even more. So that's just something to keep in mind going into the next couple of quarters here. It's kind of a big macro view that, again, is a risk that we have to understand and outline, but again, isn't necessarily the base case for what we're seeing in the system right now. So that is kind of why the overall market is behaving the way that it is today. There is elevated levels of fear in the system, and as we all know, when the market as a whole here starts to get a little bit worried, we do tend to see these very, very aggressive movements there. So let's kind of move on and start taking a look at some of these individual names here. The first one, NIO. So on the daily time frame here, we are now starting to see a very, very solid look out of this name here. A nice move up, nice period of consolidation, and we could easily see a break above this 754, 755 area, sending us up into kind of the low eights here, right at that $8 mark, before NIO reports their earnings on November 19th. That's the approximate date that TradingView has for it right now. The weekly chart of NIO, again, the one that we've been looking at over the last few weeks here, since really September, is still looking very solid here. Now, again, like I say, every single time that we talk about NIO, it is always going to come down to the company's ability to execute on the goals that they've outlined to shareholders, those profitability metrics. If they can, awesome, they're going to get re-rated higher. If they can't, well, they're probably going to struggle in terms of their valuation over the period of time that it's going to take them to actually hit those goals. Now, a couple of interesting pieces of news that have come out over the last few days here. Goldman Sachs raises NIO's price target on improved model competitiveness and sales. Very solid update there. We also have NIO deliveries exceeding 10,000 units again last week. Again, another positive development there. And we also have NIO CEO William Li visiting Europe as EV makers' overseas efforts continue. So again, expanding into these European markets is again going to increase NIO's kind of total or theoretical addressable market in the short term here. Again, all positive signs for NIO in the short term. So moving on here a little bit, let's talk a little bit about Palantir, because this is a very, very interesting move here that I think it might be catching some of the more inexperienced investors or market participants off guard. But a company like Palantir that quite honestly has a cult following, and that's sometimes a good thing, and it's also sometimes a bad thing when those echo chambers do start to form. This has been a name that I gave out to everybody at $15 a share. It's currently still trading at $177 here. But what is starting to happen is the market is starting to hold Palantir to a little bit of a higher standard because of the valuation that it's currently commanding in the marketplace here. It's going to be very difficult with Palantir's current revenue numbers, even with their growth rates, to justify these high levels that it's trading at here. Now, it doesn't mean that Palantir as a business is not going to have success, but what it does mean is the same thing that I've been saying a lot in these videos over the last couple of months here. Palantir is not a name that you really want to go longing at the highs. It's not a name necessarily that you want to go out and necessarily short or sell, especially if you were getting into this name at those lower levels, especially where I was giving it out at $15, $16. It's just one that you kind of sit back, relax, and wait and see how this thesis continues to play out and how the overall market is going to continue to treat these companies that are succeeding in the artificial intelligence space. Now, again, another thing that's pretty notable, we also do have the Big Short's Michael Burry coming out and taking downside positions on Palantir. Now, it's not technically a short. I believe he has put contracts on Palantir there. And again, there are a lot of, quite honestly, really stupid things being said about Michael Burry's short position on Palantir. People are saying that he put 60-something% of his overall portfolio into Palantir downside positions. That's just not the case. That's the notional value of his position. A lot of people are learning what notional value is. Again, if you're looking at those things, take the amount of contracts that it says he owns, multiply it by 100, and then multiply it by the closing price of Palantir at the end of the last quarter, and you'll get very close to that value that is saying it's about 60% of his portfolio there. But again, Alex Karp, in typical Alex Karp fashion, comes out swinging when finding out about anybody taking downside positions against his beloved Palantir there. So again, nothing too crazy, but definitely something to watch if you guys want a little bit of Alex Karp entertainment. So the next one that I want to talk about here, we're just going to go over a couple of charts. SoFi, again, reported solid earnings and is looking all right on this daily time frame here. Again, we can take a look at this on the weekly very quickly. Not necessarily one that I want to be looking to take any short-term positions on right now. We actually might get another weekly setup on SoFi here. Remember, I gave this name out at $6.60. That's where I own it. I also gave this setup out for free on the weekly breakout here at $13.60. So again, this is just using the LTMP methodology that I teach to you guys all the time. The stock is still up more than 100% since that last call out there. So again, congratulations to all of you guys paying attention. But again, very similarly to Palantir and how I'm going to treat SoFi here in this SoFi position, it's not one that I'm going to long at the highs. It's definitely not one that I want to be selling right now or to go out and short at all. But this is one that you can kind of just sit back, relax, enjoy the gains, and also understand, again, how they're doing as a business, which is very well. Looking at the developments and the different ways that they are trying to take their business in the future, and if that is following along with the thesis that you have for this investment, then you really don't have to do anything in the short term. Then we come into AMD over here, which again, this is my largest holding. I bought this stock at $11.39 many years ago. I know I look young. I've been doing this since I was 14 years old, guys. So AMD has been an absolutely massive winner for me. Only started selling this name last year when we were starting to get over 200. So I was actually selling some covered calls at that area. My basis on this name is negative. I'm just going to let this one go here. Reported very solid earnings. We have those OpenAI deals. We have different government partnership. We have all sorts of really positive things happening for AMD. But today, down about 5.67%. Off of, again, the overall market movements here. These high flyers and these AI names and these companies growing significantly and the ones that everybody is paying attention to are obviously going to be the ones that are going to witness the most amount of volatility on these days where the market is going to be moving all over the place like we are seeing it do today. So the last one that I want to talk about with you guys here is HIMS. And HIMS is really in a dangerous spot on the chart here. Remember, when we were looking at this name over the last few months, HIMS did like to show a lot of respect, really over the last year or so here, a lot of respect for this 200 exponential moving average here. in this area that I was talking to you guys about, I believe it was Thursday, August 21st, was the last time that I was outlining for everybody that if you wanted to dip your toe back into HIMS, that was a decent area to be doing that. You have a really nice level of support. You've already shown you wanted to bounce off the 200 EMA. And then you ended up making a very solid move back to the upside there from the 40s all the way up into the 60s. So almost about a 50-60% gain on equity in a very, very short period of time. Now, with the new developments today that we are going to be seeing lower GLP-1 pricing in the United States here, well, HIMS prices, I believe, are less than the already existing prices there, even after the price cuts that we saw the Trump administration kind of enact today. And HIMS, again, is not just a weight loss company. I think this one, again, has a lot of potential to succeed over the next, let's say, 5, 10, 15, 20 years. But we do have to be careful of these current aggressive valuations here. This is a very high flyer. It comes with a lot of volatility, and with that, we always want to be managing our risk appropriately. So in order for me to say that HIMS is looking like it wants to move back to the upside, obviously we have to reclaim this daily 200 EMA, and obviously we are going to want to see a nice period of consolidation after that ends up happening, hopefully in the near future for all of you guys that are holding this name. But with the overall volatility that we're seeing in the market, anything can happen. So, ladies and gentlemen, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys are, and turn on notifications so you're notified every time these videos do end up getting posted live. And for those of you guys making that right decision to join us in LTMP to become that next success story, welcome. Make sure you guys start on the learning curriculum. Ask me any questions that you guys have. I'm always around to answer. But until next time, guys, I will see you. Peace.